Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US equity markets closed in mixed territory on Friday, which saw the S&P 500 and the Dow Jones snap their 6 weeks winning streaks. This week's economic calendar is laden with event risks, including earnings reports from tech giants Microsoft, Alphabet, Meta, and Amazon. And we also get the advanced estimate of Q3 GDP growth, non-farm payrolls, ISM manufacturing PMI, and PCE inflation data. The rates market starts the week pricing in a 95% chance of a 25 basis point Fed rate cut in November, with a cumulative 44 basis points of Fed rate cuts priced in by year end. Let's take a look at the charts of the S&P 500 and the NASDAQ to see where they are as we start the new week. Okay, starting with the NASDAQ 100, new highs in terms of 3-month highs for the NASDAQ, but it was unable to push through this 20,690 high. You can see here this candle that formed does show a little bit of selling, was up here around this all-time high. It is what we call a loss of momentum candle on the NASDAQ 100 cash. Not entirely convincing this rally upwards, but at this point of time, we're so close to this 20,690 high, we do need to allow it the benefit of the doubt. And if it was to break above here, then we could see 21,500. That said, if we were to see the NASDAQ 100 break below this uptrend support coming from this 17,453 low, which comes in around 19,850-ish, and there is also some horizontal support coming through at 20,000. So we've got a decent layer of support here. But more importantly, I see this swing low from the 1st of October coming in around 19,600, let's say 19,500 to give it some room. A sustained break below here, then we can start to look towards some downside targets, starting with the 200-day moving average, which comes in around 18,750. Below there is, of course, the September low, 18,400, and then some pretty solid uptrend support, which we see coming in around 18,200-ish. Now, if it was to break below here, then, of course, this low comes into play. But as I said, we're holding above support. We're going to give it the benefit of the doubt for a test of this high, potentially up towards 21,500. For the S&P 500 cash, a similar story. We've got some uptrend support coming from the August low. That comes in around 57.70-ish to 57.60-ish. And then we've got a really solid band of horizontal support coming in 100 points lower, 56.70-ish to 56.50-ish. So while we hold above this support area here, then we need to allow for the uptrend to continue, potentially up towards 6,000. But a sustained break above here, things would start to get very, very interesting, because it would open up downside targets starting with this 54.02 low from the 6th of September and then extending towards a 200-day moving average coming in around 53.33. Thanks for listening and have a good week ahead.